Well, hello there, everybody. Michael Silva. Look, we knew and at least had a good idea as to when the market was going to start rallying up higher. We take a look at the summation index and we watch the parabolic SAR downtick. And this has been an excellent tool to help identify changes in trend. As you can see, it turned over there, we moved down. It turned up here, we moved up. Now, there are some warning signs that are building, and I'm going to continue to reiterate those because of how important they are. And we're also going to talk about expected moves and earnings expected moves and why those are so important to be watching here in today's Stock Market Brief show. We're going to get right into it. Now, this is actually the Nasdaq summation index. I just previously showed you the New York Stock Exchange summation index. And you could see here, we had that turn right over here. We had the negative one turn over here. It went down. And here, right about this way, it started going up. Okay, and now you can see price actions kind of coiling tighter right here. Probably going to be getting an explosive move. It could be to the upside. It could be to the downside. But like I said, there are some bearish things taking place that we need to be aware of. Now, if we take a look at the overall market, how did we do today? Well, we didn't really do much at all. Go figure, right? Volatility is being suppressed as we know that options expiration, the last day to trade the VIX options was today. We have VIX OpX tomorrow, and I'll show you a calendar on that momentarily. Now, let's take a look at this chart is what I shared yesterday. This is looking at Bookmap. Now, if you don't use Bookmap, you need to use at least level 2 data, right? Because if you are trading intraday and you're not aware of what's the orders that are behind those candlesticks or what makes up those candlesticks, you're just trading somewhat with a blindfold on. When you take that off, you're allowed to see where big order blocks are, and it can help you find areas of potential support and potential resistance and even better entry points, a little bit more tactical way of trading. Now, in yesterday's show, we talked about how watch out for this 4,200 area. We leveled it out right here because that could be a potential level of resistance. Well, look at what Bookmap did, or well, look what ES did, and look how it reacted on Bookmap. You can see before the market opened, right? This is at about just past 5 a.m. The market opens up at 6:30 a.m. I'm talking Pacific Standard Time. It came up into that upper expected move, right? The upper expected move was 41.98, which is in confluence with the 4,200 right there with all those orders, and you could see price started to push back down. Okay, it didn't come quite down to the lower expected move, but then we started to move up, and then we're kind of just going sideways for the remainder of the day. A lot of chop. I'm showing you this because I want to give you also tomorrow's daily expected moves for ES. As we stated, it's important to watch. 42.01, so it's right back at that 42 level, that 4,200, so the order is still there. This can sometimes act as a level, like a magnet. It could suck price in, right? This is an auction of buyers and sellers, and if people want to pay, right, it's going to, if price is moving up, it's going to look to where there's the next area of supply, where people are willing to take profits, right, or sell into it. And the same goes for the bid, right, down below, right? Market might be fine because it's looking for buyers, right? Think of like you listing something on eBay and it doesn't sell. Well, maybe it'll sell with buyers down here. Oh, it's not, no buyers? Okay, maybe it'll sell with people down here. Oh, no, not there? Oh, well, maybe right here there's some buyers hanging out. That's why it's so important to understand this as an auction place. Now, I want to talk about earnings expected moves and why these are important. So Netflix, right, reported earnings after hours. It was down and then it was up. But I want to show you this because many traders might not show you just how important this is. This was me. I took a short position here. Now, you got to understand this. Earnings season, this is where you get the most intelligent people, doing research and, macro models, data frameworks, all this crazy algorithmic stuff. And it's one of probably the most populated areas of studied areas in the stock market. So you got to understand who your competition is here, right? If you're just saying, hey, maybe I'll, short it here, or maybe I'll go long, understand that you're going up against, very intelligent people. Okay. So I'm aware of this. Now, me looking at Netflix, I was under the impression that reporting is not going to be all too hot coming into this earnings season. Well, okay. So I shorted, but how big was my conviction here? 10 shares, okay? Well, first off, why would I only short 10 shares? Well, I'm looking at the expected move. The expected move was what? It was plus or minus $30. And this was given to me before, obviously, they reported earnings. This is why it's so important to look at that data. Okay, so I just said, I'm going to just take a little stab at this, which I don't typically do, right? There's other strategies you can play here. So I shorted into it 10 shares. You can see right there at 332.68, just right into the close. And then price came screaming down right out of the gate. Now, did I hold on and say, oh, maybe it's going to crash to even lower and lower and lower and lower? No, because this is a quick type of money grab. It's being aware of the levels. I didn't think it was going to explode higher, but I just covered my short position there, which, in 2 minutes, that's about $300. That is an amazing trade. And now price is obviously right back to where it started. It was even up. So we'll see where it opens or where it goes tomorrow. But keep in mind, the expected move was just tagged in the aftermarket session. Now, why is that important? I'm not saying this to brag about a trade. It's earnings season. We got a lot more stocks reporting earnings, right? So before the open, we got these names over here. After the close, we got likes of Tesla. So a lot of, we got some regional banks, right? Reporting earnings. We got Morgan Stanley also is going to be another one. US Bancorp too. I went ahead and I pulled the expected moves for you so you can watch this in the pre-market session and see how they attack these levels. Upper levels, lower levels. These are the assets that are reporting earnings pre-market. This is the expected move, which means it could go up 3, down 3, up 3, down 3, up 2, down 2, and so forth down the list. I even included 2 sigma moves. Why? Well, you got to understand this. This is like a bell curve, right? It doesn't mean it has to hit that level, but as the bell curve goes, a 1 standard deviation move, price, right? If you think of these expected moves as standard deviations, 68% of the time, price is going to close within this earnings expected move, okay? But there are chances that we hit a 2 sigma move, okay? And a 2 sigma move would go out here, which is like 90, I believe it's 94% of the time or 95% of the time, price action will close between a 2 sigma expected move on both sides, okay, plus or minus these levels, okay? So those are the levels to watch going into tomorrow's trading session for those expected moves. This is something that I typically share with my Discord, but on the earnings season, I'll just share it when I have the time to do so. Now, some interesting stuff that's been taking place. Volatility, as we previously stated, it's being suppressed, right? Its volatility is just kind of getting crunched down to the downside. Another low close there in the 16 handle, as you can see. And as we move down, right, and we talked about this one yesterday, you can see smaller moves in the S&P 500, right? This is on a daily average about 1%, right? And as we've seen today, the S&P 500 it probably moved up and down around 1%, but it finished rather flat on the day. Now, this is interesting to me because VIX was down. Volatility of volatility, the VVIX, this thing fired off like a rocket ship, okay? Not only that, skew started to move higher there too as well. So there is dynamic hedging, or there's hedging taking place. That's what I'm seeing here. Hedging for what? I don't know. It could very well be like we stated. We have VIX OpX, right? So this was the last day right here, the 18th, to trade expiring VIX operations. Tomorrow, the 19th, is VIX options standard expiration. So it's going to be probably a pretty funky day going into tomorrow. Another thing that we've been paying attention to was back month versus front month, and we wait for it to reach up to around 20% higher. This is a cool chart that I learned from Brandon Chapman, and he pointed out multiple times that, hey, when the back month versus front month comes up to around that 20% higher, you can see that's actually marked these bear market rally peaks and these turning points. So as we're really close to this area, it doesn't need to reach up there, but as we're really close and we've seen a strong move with no digestion really, it could potentially mark a top, a short-term top. We don't know, but it's something to be well aware of. Let's also look here at the zones. This is something that I share daily with the Discord group or the Patreon group, which is linked in the pinned comment section below, as well as, by the way, Bookmap. Bookmap, I get they offer my subscribers a discount. So what am I seeing here? Well, skew is coming to the upper range, so there's definitely hedging taking place. It closed above that 130 marker, 135. It's at 137. Okay, VVIX also shot up to the upper point of the range, but yet all these three products are towards the lower ends of their zones, and you can see here that's Russell volatility, S&P 500 or the VIX volatility, and then VXN, which is Nasdaq volatility. Which is all very important stuff to just continue to pay attention to. Now, this is all happening while we're getting vol suppressed bonds had a slight up day today. We talked about that one yesterday. You might be able to trade this up. Well, we got a little bit of a move up, right? So we'll continue to watch this as we think that we could be at the early stages of a bull market there in bonds. The TNX, so the 10-year yield, backed off slightly today, but it's been just massive amounts of volatility. The dollar was an inside trading day today on the USD, so we'll continue to monitor here, see if this is just taking a pause before it breaks out, which could cause more mayhem to the dollar, or if we're going to just all of a sudden see this drop back off and see the S&P 500 get more of a rally. This right here, I want to just call out really quickly. Just a couple assets like financials. Financials is now towards the top end of its range, and financials have been kind of, moving up slightly here. And this could be a potential good opportunity to look to short these as they've been, heavily beaten down. They're kind of just floating up higher. So I'll be watching them for a potential short opportunity. XBI, which is biotech, is also nearing that higher end too. This is the Patreon thing that I shared. This is $9 a month, or you can do annually for $90 and you get access to my trade ideas, right, which I shared some yesterday, the watch list when I update it, weekly expected moves. I do daily expected moves now. I just haven't included that stuff in the landing page. I give zones, which are these, which are those right here too as well, and then you have access to the community as well. Okay, if we continue on, we're going to look at the SPY on the daily time frame. We still here are on this rising wedge structure that I'm watching. We had that gap up, and we closed with that red candle. So a gap up, close lower, not the greatest looking candle, but really we haven't done much. So it's continuing to just compress, right? We're continuing to contract. So don't be surprised if we get some explosive move here, and that could be, like I said, to the upside or downside in the near future. Where's the upside and the downside potential? It's the weekly expected moves. So 418.41 to 406.51 to the downside. On the daily expected move going into tomorrow, this 416.71 to the upside and 411.71 to the downside. If we do get hit to the downside, that'd be roughly this bear market measured move right here, bear flag measured move, right? This was something that I was watching intraday forming, and then it did break down with a quick hit. And where did it hit down to? It hit down to where? The week to date anchored VWAP. That's why it's so important to watch these levels, right? They hold as potential areas of support. And you can see it came right back into this channel, and then it held it throughout the day. Now, if we start breaking down and we get below that week to date anchored VWAP, we come test that 5-day moving average and potentially that lower level 411.71. If we start breaking through that, pay attention to the month to date anchored VWAP, okay? That's what I'd be looking for to the downside. As far as the upside goes, this is just a very choppy market. You really need to see something positive set up. Like, so for example, if we start breaking out the high of here, but I wouldn't want it to start up here. Really, I'd rather prefer it to gap down and maybe retest the week to date, hold that, and then potentially come back up and do something like that to come hit that 416.71. It's been a very hard trading day today and even the prior day. So it's been favoring, surprisingly, swing trading more than intraday trading. And some of the swing trades that we share in this have been doing quite well. And when they do well, you need to make sure that you lock in some profits or you update your risk parameters, whether that could be updating stops, because some of these names that have been moving, DKNG today was up 8%. That was on one of the trade ideas. You don't want that to turn into a loser after running 8%. At least in this market. If you take a look at the Qs, same situation, right? We gapped up, came right back down, and then we just went sideways the entire day where we're holding the month-to-date anchored VWAP. If we start breaking down that, it opens the door to the 5-day and the week-to-date it's been holding the week-to-date anchored VWAP. If it breaks, it'll come down to the 5-day moving average and the month-to-date anchored VWAP. So this could very well be flagging, and that opens the door to where? It opens down to the lower expected move and then potentially even the lower weekly expected move. If we start breaking out of here to the upside, well, let's see if it get back test, get some strength, and start moving higher into the upper daily expected move. Be careful chasing gap ups. The reason why I say I don't like to chase gaps ups is exactly what we saw today here in the SPY and the Qs. It gapped up, and what do? We came crushing back down into this week to date, I keep saying that, anchored VWAP. And you can see price, what's it been doing since March 31st? Hasn't done anything, right? It's just building open interest in this chop box over here. So when we have a move, it's probably going to be quite explosive. from the looks of it. Now, this is all taking place on the back of a bullish percent index, RSI, that is getting into that overbought condition. Remember, it oscillates between overbought to oversold, and overbought, and it'll eventually be oversold again at some point. This is also taking place as we're looking at the Nasdaq-McClellan oscillator. That negative divergence is still holding there as this price action is getting very tight in this rising wedge structure. The Pring bottom fisher is starting to turn back around here too as well. I like to use this to catch bottoms, not necessarily tops. It's more accurate. If both these lines, the Pring bottom fisher and the 10-period moving average, go below -30, and then they start turning back up right here, and right here are good examples. That marked where? That marked the bottom going into 2019. It marked the bottom in the pandemic. And, well, guess what? It also marked the bottom here, the current bottom, in October, and we could see we started moving up from that point. Now, the last time that we saw this turnover was right here, and that was roughly in this area where we saw the market did come down, so I figured might as well just pay attention to that now. Now, also be mindful that as the S&P 500 get into this overbought territory, it's a cap-weighted index, and what does that mean? It means that the big names, if they start falling as they're starting to report earnings, it could very well bring the S&P 500 as well as the Qs down. And if we take a look at something like Google's already made a monster run and hasn't consolidated much. A bearish engulfing candle today as it's trying to hold on to that 20-period moving average, and it's in this band of prior resistance as it stands with the MACD curling over. That's a big name to watch. Amazon is back up into this prior area of resistance trend line. So if it starts backing off too, that can hold weight on consumer discretionary names, which also can hold weight to the S&P 500. Apple's also another big name to watch, and you can see here it's coming up to its prior area of resistance, this trend line. We have resistance, 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 and now we're kind of pushing right through that area as it stands right now. So we'll see here if this marks another topping point or if we get some sort of bull trap, which would be quite insane there too as well. Tesla's going to be reporting earnings tomorrow after the close, and you can see what is price doing, right? Huge move in 2023. This is coiling up, getting pretty tight here. Even right here, it's somewhat of a miniature bear flag, but overall in a pennant structure. So if we start breaking from this 180, that opens the door down to this gap, which is something that I've been tracking for quite some time. And if we start breaking out to the upside, it comes back up to the upper trend line, potentially even trying to get back above the 200, which clearly this band of resistance here has been holding as resistance as it held as prior area of support as well. Nvidia on the weekly time frame over here is also in this area of resistance in a rising wedge structure, and RSI is over bot conditions. The MACD it's still pointing up as it stands right now. Sometimes tops take a long time to form, but it is getting pretty far past the 50-week, 200-week, 20-week moving average. So this is also something to just consider watching if it starts breaking down, as Nvidia has been a very strong performer and it holds a lot of weight in the Nasdaq. If we take a look and the SPY and Microsoft's also pushing up into this prior area of resistance here. Right now, you can see price is coiling up pretty tightly these last 3 weeks. So this would be around 3 weeks tight if it holds this. And if it goes even more, that'd be 4 weeks tight, which means what? It means we expanded, we contracted, then we're starting to look for volatility to expand again. That could be to the upside, which could be a good risk to reward trade. Or if it breaks down to the downside, it could be a potential good risk to reward trade too, to reconnect with some of those moving averages. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.